Today I want to talk about creating a portfolio that's customized for your situation. The starting point of that is assessing your risk profile. We call it your investor profile, which would basically be all the data about you, your net worth, your liabilities, your investable assets and where they are and so forth. But then looking at some type of a risk score. And the industry uses lots of different ways to analyze this, but I think there's really basically two ways. The first way would be a quantitative way, and that's really just a test. We have one at Rich Wealth Management. We use about 9 questions to kind of pigeonhole people and see where their risks lie. We've been using the same questionnaire for years, so it's kind of like going into the doctor and getting your blood pressure taken. Every few years we'll go through this again because your risk profile can change. But when we first start, we try to figure out, okay, is this person aggressive? Is this person moderate? Are they conservative? And we have 5 profiles that we tend to put people in. Sometimes they're on the margins of one to the other, but we try to fit them into those 5. Those 5 are conservative, moderate, moderately aggressive, and aggressive. The next is a qualitative approach, and that really is looking at the person as a human being and how they act and take risks in their personal life. I mean, are you a skydiving person, an adrenaline junkie, or are you more of a nervous Nelly and conservative? If you're not self-aware of those things, then maybe talk to your spouse or friend, partner, and family and see what they say. But we do kind of an assessment of those things, and then looking at your stage of life and your goals and your financial situation, your income, we'll come to some type of a profile and say, okay, here's where we think this is where you fit. And 9 times out of 10, the client will agree. Oh yeah, that's me. That makes total sense. I mean, on occasion you run into folks that they want to have those high returns, but they're really a closet, more of a conservative. And you kind of got to point those things out and walk that fine line and kind of walk people through that so they understand how it works. Because you really can't avoid the relationship between risk and return. It's just, they are connected. Those profiles are different for everyone. I think of one example of a client that's passed on now, but he lived to 105. And up until 100 years old, he was still pretty aggressive because he'd been retired for 40 years. And he had a pension, and he had no debt, and he wanted money in the stock market. And I remember having a conversation with him, and he had remembered the Depression, and he shrugged off the 2008 financial crisis and was unaffected by it, where some people really freaked out. We've had clients that are in their 30s that are much more conservative. So it's all very personalized, and we try to assess that as accurately as we can. It's kind of an art and a science, but that's the starting point of any good portfolio management, and we're happy to help you with that. Reach out today if you have any questions. Please follow us at richwealthmanagement.com. Thanks for watching. Please like and subscribe.